Thanks for tuning in to the All Funds Network. My name is Mike Schroeder. Today I'm here with my co-host Skyler Steinke, and we are joined by friend of the podcast, Pat Clancy. Pat is the head of growth at Otto. Pat, thanks for joining us, man.
Hey, stoked to be here. Good to see you, Mike. Good to see you, Skyler. Looking
Yeah,
forward to the chat.
absolutely.
Likewise, man. Let's start with your background. Give us a quick what's your crypto story? We've known you for years. We've all been in the industry. But what's your crypto story? How'd you get into the game?
Yeah, I mean, I'll probably dovetail this with just like background, right? It's probably a good way to do this. So when I came out of college, I was an honors finance kid. Went into accounting advisory work. I was at a firm called Rothstein Cass. Shout out to anyone who knows Rothstein Cass. They got acquired by KPMG, and we were working on large investment fund vehicles. So we were supporting a lot of hedge, VC, private equity, fund-to-fund pieces. And my big curiosity, especially back in the day, was related to seeing what were these managers up to. You couldn't Google like you can today, just like everything that was going on, like back in the early like 2000s, even 2010s. A lot of these were like very privately held, and you could pull some things from the Form ADV, but it was really interesting just to see like what different managers were doing in different asset classes. And that was a really interesting piece for me. I eventually, rotated through KPMG to BDO, where I got into a business development role, helped build a national practice over there as it relates to their fund practice. And really just thought it was time for me to kind of go to a private fund manager. I went to a boutique shop, $10 billion shop. They had the range of products from a privately managed like high net worth individual component, but then it also had 40 Act funds and private funds and research that we sold to TAMPs, turnkey asset management platforms for like model portfolio work. And then we also sold our research. So it was a really cool like mixed bag of just different things. This is where candidly I got to have like a lot of just different pieces. I was able to get my securities licenses. I was able to help support on the trading desk. I actually eventually started leading trading and execution, supported like our research analysts on, certain investment metrics and or just research that they needed to do or analytics that needed to come with that. But really what ended up happening was I had some buddies of mine in high school. I'm going back like to 2011, and really it was funny because it really comes from two individuals. One was an early Bitcoiner, and he told me in 2011 to start buying some of this stuff, which I promptly was trying to figure out how to get some. He's a pretty smart guy. And the second one came when I was playing they were within a week of each other. We were playing football for Thanksgiving, and a bunch of old friends got together, and this guy I know left Bain Consulting to go be the number 5 dude at Coinbase. And then that's when I was like, hey, this is absolutely real. And that's when I started dedicating a little bit more time to this while I was also working in public accounting. And then I was at that fund manager shop and effectively, wrote this long email called my tinfoil hat, and was trying to convince my CIO of a $10 billion shop to buy some Bitcoin. And I promptly got laughed out of the room, and then left there, went to set up a digital asset practice at a firm called Armanino, helped grow that practice out pretty promptly. With over 2 years, we had over like 250 different crypto projects and groups that we were supporting. And then got an offer from Matt Stover to come over and start helping with what he was doing. And it was an offer I couldn't refuse. So really, that's really the journey. And, that's how I'm here today, kind of talking to you guys.
That's awesome. That's really cool to see. Kind of obviously been in the space a long time. And obviously the conversations early on when you're talking to the people in the traditional finance space can be interesting. It's vaporware. I know all the stuff that came my way. A lot of hate mail, if you will, of like, what are you doing? You can run your career type deal. But yeah, I'm sure you had a bunch of that too.
Yeah, I mean, the goal is I want to find that email. I think my old COO has it somewhere, but it's my tinfoil hat. So I know that they still remember it. It's out there, and sometimes I still talk to those guys over there. But yeah, I mean, needless to say, if you have convictions, you want to be able to take those early. And the thing is I was actually trying to go to a crypto fund because I was at a fund manager, and it was like impossible 2017, 18 to get any of those jobs. And so the next best thing for me was go into consulting from a CPA side. And so that's how I kind of got into that.
Yeah, it makes sense. From the MG Stover side, you mentioned obviously transitioning to that role in that space early on, fund admin in digital assets. Talk to us about that a little bit more.
Yeah, I mean, I came a little bit later in that story, right? I mean, Matt had grew that practice. I mean, MG Stover started in, I believe, like 2007, 2008, and they were doing fund admin for private fund managers. And I think their foray into crypto really started as a favor to a family office group in 2015. Basically, these guys had written a check. They're like, hey, can you guys figure this stuff out for us? And, I think really the team from there really started building best practices as it relates to cutting NAV as of a UTC standard, mark the assets to market. A lot of different things that we all take for granted today. Where, a lot of Matt and Seth and other folks on the team, a lot of their initial storylines and trying to create some level of standardization and compliance to it. What you also saw were getting banks and auditors and other people to want to be able to participate. Matt was pretty early on selecting those groups as well. And it's a pretty interesting story because it does dovetail with what we were doing in some ways over at Armanino, because we were still pretty early. We were more focused on the enterprise side, I think more around like the blockchains and the projects, et cetera. And Matt was more focused, and MG Stover, obviously, on the funds and the fund administration components. That grew their business to, I think in its heyday, like close to 50 billion assets under management. I maybe 45, but I know for quite some times they had the who's who of managers, especially as we were servicing them into when I came on and the acquisition of PolySign, with the standard custody components and all the things that the offering that they had there. I think really it led to the understanding of like, hey, there's a lot, if you look at traditional financial models, like financial services models, a lot of these banks and groups have not only, back office arms, but they also have the banking and custody and other things, and how they kind of put those all together. I think that was the general plan. That business units, of standard custody and the ideas that happen around that didn't come to full fruition, but we had like a lot of great ideas that came out of it. That eventually got sold over to Ripple, and then Matt effectively doubled down on MG Stover, and then that was sold over to Securitize, the fund admin business. And so there's a lot of like different, loops and stories into the MG Stover component, into the storyline. But really the big thing at the end of the day is that we are subject matter experts as it relates to digital assets. And rather than focusing on servicing the funds from the investor servicing and the fund admin components and the things that come with that do require a lot of time and effort and hopefully more automation, we wanted to focus on the automation of the toughest part, which is the portfolio, and focus on the portfolio reconciliation component. So now Securitize is our largest client to date. So yeah.
I love it. We're definitely going to get into Otto and what you guys are working on there. That's interesting to talk about here is as MG Stover got sold twice. So, maybe kind of tell us that story. You just kind of gave us like a brief summary, but kind of, dive into that a little bit. MG Stover sold to PolySign, kind of how did that happen and what happened afterwards?
Yeah, I mean, this is candidly more a Matt's story than my story, because I came on kind of during the acquisition of PolySign acquiring MG Stover. Now, I did get word of what was going on before, which led to my early departure from Armanino. And candidly, I wanted to take some time off just to be able to get my, as you guys know, this industry is 24/7, 365, and I wanted to charge the batteries a little bit. But effectively, Matt had known Jack McDonald, who is the CEO of PolySign and its custodial trust business, Standard Custody. And really what came into it was that the main goal was, Matt, MG Stover has all these crypto funds. We should be able to rotate these assets over and provide them a custodial offering. And on paper, it's a great idea. The question that it comes into it, and we could get into this a little bit later, is that the custodians initially, especially within TradFi, are seen as typically as a cost center, right? And so if you're not providing kind of product adjacent income alternatives or ways of generating yield on your assets or other ways of just kind of getting rewards, not everyone is going to want to put their assets into a custodian. And so I think some of the things and headwinds that we came across, candidly, and we're pretty forthright about it. I think we had some really great ideas and plans that had come out of it, and I can get into that in a second. But I think the main thing that came into it was just it was a tricky sale to move assets from a administration perspective into a custodial relationship. And I think it really just boiled down to, what could a New York DFS custodial trust be able to do at that time? It wasn't like we had Donald Trump and the current environment. There was a lot of regulatory headwinds that we had to deal with in thinking about it, but that didn't really stop from the innovation components. Like, we had thought about building a stablecoin out of this custodian. Now you're starting to see stablecoins are a very hot and emerging trend, especially if you are a QC and you've got people operating on margin and then they have to settle in your stablecoin. That creates automatic volume and some other things that would be advantageous to a lot of groups. There was also some things that we looked at with Lido and Stake Deep, and being able to provide kind of like an institutional playground to Stake Deep and Lido, and how to kind of focus around the AML KYC components of asset managers trying to do that properly without the nuances of potentially messing with someone on the other side of a trade or within a same pool as you, and you don't know if they're AML or KYC'd properly. And so there were those things. There was also some early talks that we had with the Maple Finance crew around tri-party agreements for their product services. And so, a few years later, should we have the runway for it, all these ideas are really kicking off and really starting to grab hold. I think, candidly, it was really about a timing thing that happened on that. And effectively what happened was, it was time to find a place for Standard Custody. Ripple raised their hand, as they, have quite the piggy bank. And they also are, expanding their institutional offerings. And effectively that was primarily the first sale and separation of MG Stover from PolySign. And then really what it came down to for us was, okay, do we want to be in the fund administration game? What are we good at? What do we as service providers and experts in the space, what tangible value do we have? I think we had a number of conversations with other groups specifically about buying the fund admin business. Effectively, it came down to, I think, the most innovative group and probably going to be one of the most key players going forward. Will likely, and we'll see how this all plays out. But it seemed that we were mostly aligned with Securitize and their offerings as it relates to being able to bridge the gap, especially around some of their tokenized plays. I mean, Skyler, around the tokenization of certain assets and things that are kind of happening there. Obviously, when you've got a number of asset managers who also want to kind of create liquidity or, structured products or other things that they could utilize within a nice platform, Securitize gives a great option for that. And really we just wanted to make sure, for the majority of the employees, or Matt wanted to make sure that they were in a place that they would be taken care of. And that's kind of how that story led to. But for us, we wanted to focus on Otto, and that was a big part of the reconciliation process for all that work that gets done at MG Stover. And so now we have that big partnership with Securitize on the portfolio work for the fund managers. And it's pretty exciting, but that is the full story, to give it in a cliff note.
That's awesome. You brought a bunch of good points there, Pat. Just because this space, as being in it for a long time, innovation happens so fast, and the adaptability is key, right? But what do you do? Like, you talk about custody. I'd love to hear your thoughts. The custody market these days, what it was even a year ago, can be drastically different, right?
100%. I think there's a rotation now from where you're seeing these custody groups, as cost centers. They're now using the custody component almost as a loss leader. And effectively what they're doing now is they're becoming these income generating platforms. And I think the thing that, that we're all noticing, and I'd love to get your guys' take on this as well, whether it be the big ones with the federal charters or the ones with the state charters or the state licensees. The big thing comes down to is, okay, my assets are now in your custody and you have the best security, and whether it's sharded MPCs or you got HSM modules or whatever you may be doing from a security standpoint, the assets are safe. Okay. But how do I create yield on these assets while they're safe? And what they've done now, it's very interesting, is I was actually thinking for some time that, some of these other providers, whether they be staking providers or others, and I still believe this to be true. I think that the hierarchy food chain is going to start flipping. And what I mean by that is that platforms, and I want to say this as broad of a narrative as possible, but platforms that are effectively providing some type of reward on the assets that you are leaving on their platform, whether those are custodied or your staking assets, or you're operating within DeFi on liquidity pools. Pick a project within each of those three types of pods. You could go the hyperliquid route on the DEX things. You could go, pick an Anchorage or a BitGo as it relates to the custody things. You could do a global stake on the staking side. Everyone has their own different way of how of perceived value, but the goal is not everyone's just going to place assets just for them to sit there and be safe. Custodians in particular, they now have trading desks. They now have VC arms. So now they're starting to look around the corner. Which projects are starting to take off? Which ones should we actually be writing checks into, or having our developers build, infrastructure, or to be able to support these types of protocols and chains? And I think the big thing that it's leading to is that those with the capital and the runway, and the ability, or it could be wallets like Phantom, others, where, if you've got a community and people, they're heavy on the retail side and they're trying to make that jump over to the institutional side. I think eventually you'll start seeing more and more groups likely consolidate. And I think that consolidation component either is going to come through white labeling to TradFi, or TradFi thinks that they're going to be able to build it. By the way, good luck, TradFi. Like, there's a lot of time that gets spent on this, and good luck trying to convince devs to come to a centralized entity. I think the thing that it will come into is, who is going to either be white labeling, who's going to be building, and or who's going to be supporting kind of these yield generating products. And that's my general thought. I mean, hopefully I answered your question.
Yeah, absolutely. I agree. I think to your point, I mean, the TradFi side, I think they're gleaning and gathering talent on the other side of the fence to bring into their ecosystem, not the other way around, right?
Well, you guys get hit up for them too. I know you do. I mean, as do I. It's just a matter of time because they can't have everyone come inside from a trading desk or from an operations component and expect them to understand how to link in all these different things or even have, industry or ecosystem knowledge. You have some groups that are heavy ETH maxis or BTC or, XRP. I mean, you could pick the gambit. We get to see all the different tribes across kind of the manager universe. But I really do think what's going to start happening is there's going to be more of this coalesced offering components where people do certain parts of the equation well. And we want to be able to do our part in that, which is the reporting part of that, to be able to piggyback on groups that are providing, solutions and rewards and pieces like that. So that's where I see a lot of this stuff going, specifically with TradFi, now starting to dip their toes into it.
Yeah. Yeah, it's a really good point. It's I mean you make a good point there. It's up why just hold your assets there when you can make 5% or some cases a lot more than that.
Yeah, it depends on the smart contract risk and what you're willing to deal with. I mean, obviously you want to put your grandma into a liquidity pool, but but for some people, I actually think a lot of these are going to start becoming a lot more user friendly, and that will tell you about the success of crypto in particular. I think the UIs will need to change, and I think the way that people interact from a compliance first perspective. Eventually it'll all be done from your cell phone. I mean, a lot of this is already done there, but I'm saying specifically for retail or for folks that aren't managing money on the behalf of others. It'll be a way of, and I think the banks, they're going to be able to capture a lot of that themselves. Now imagine you have a bank account and now you have a wallet address and you can now custody your BTC or your ETH or your SOL over at this bank. Well, the bank is now, they're going to go rehypothecate assets on their own balance sheet. There is a component of this that we have to be aware of. And I think that also gets into the concerns around digital asset treasury groups and things that people are thinking about over there. But yeah, there's a lot going on. And I mean, that's the beautiful part about our job, right? We get to see it all.
Absolutely.
So
get to see it all unfold.
Yeah.
Let's dive into the meat of it. Tell us, actually, maybe to take another step back. So you guys sold off MGST over to Securitize, which was the fund admin business, and now you guys are working on specifically Otto. So tell us kind of, what do you guys do at Otto at a high level?
Yeah, I mean, really, it's very simple. We take fragmented crypto data and we beat the hell out of it. And what I mean by that is, you guys know this just as well as others. Reconciled data is different than receiving data. And what I mean by that is there is a component that a lot of people forget about, and that's making sure that things tie and balance effectively to reporting systems and to financial statements. And you've got a lot of developers who are building on all these different chains, whether those are nascent, existing, large ones. And for us, really, what we're focused on is creating clean data that is agnostic to any reporting type of engine, be able to push and pull that data appropriately, but to make sure that it's getting reconciled intraday. So a lot of these groups, any crypto sub-ledger group that you may look at, and we've gotten to test them all. And candidly, they're friends of the industry where everyone kind of has their own specialized niche. For us, our niche specifically is on the institutional fund side. That could also get into larger entities like banks and custodians and other things. The piece that I would say is that data is still fragmented. that it still needs it needs quite a bit of manual intervention, especially on nascent chains. And how can you make this process more efficient? Well, there's programmatic ways of solving that. And we trust us, like we beat our head on the wall almost every day solving this for our clients, especially on new chains and new protocols. But really, there's a big need as it relates to also helping groups that are just trying to do it the right way. And so we can't be a third-party administrator anymore. We have strict covenants kind of against that. So our focus really is on the purity of the data, being able to ingest that data, push that into a reporting system, and allow others to be able to, if they want to create analytics to that or other pieces that are specific use cases for institutions. You don't see a ton of offerings like that. There are some out there, but for us in particular, it's really just focusing on those groups that we have serviced in the past. And these are certain points that we get to hang our hat on that not a lot of groups can say. You know, we've got over 5,500 accounts on Otto. We've done over 4 trillion of volume processed. And then we've been doing this for over 11 years. And so I think when you start thinking about numbers like that, it helps certain groups, specifically traditional groups who are entering it, feel a lot more comfortable with not only the technology, but also the group that is servicing them. And that is a fundamental difference, is that a lot of the groups want you to become power users of their technology, and it's lacking a service component. And we want to be able to bridge that gap and be able to marry those two worlds. We think of ourselves really as service as a software.
Yeah,
candidly.
No, that's a great framework, Pat. So you're bringing some great thoughts there as well, Pat. On there is no standardization of data, in the space, really, right? There's a lot of legacy systems and tools being utilized that don't talk to one another. How do you bridge that gap?
Yeah, so really, we insert Otto really as middleware. I mean, that's effectively how we think about it. The reason being, and we're dealing with another fund admin on this right now. They've got, Advent Geneva and other things that candidly, these groups haven't spent much time on the asset class. And how are they tracking tax lots properly? Are they abiding by the broker dealer rules? What about, private agreements? When there's a token generating event off of SAFT, are you carrying the cost basis from the SAFT agreement to the generated tokens? You could get into the vesting schedule. There's a lot of operational pieces where, fund managers, they're expecting to see certain assets hit, and, there's been a change to the smart contract, or there's been a change to the vesting schedule. I really think at the end of the day, where we have positioned ourselves as a middleware, you're going to start, and this is what the traction that we're getting from this is, that this is a really needed process, especially for groups who are used to having this all automated through their pricing services before, or from getting broker dealer quotes and all the things that come with your traditional operations as a fund manager. We want to be able to create one cockpit where not only operations, but the portfolio managers operate in the same room, and they can also trust and verify that data in real time is synced up and valid and accurate.
Yeah, absolutely. And that's that's probably something I get as well. Just questions about just why is this such a challenge, especially with technologists that I speak with. I'm curious your thoughts, Pat, because they say, well, isn't this an easily solvable situation? Going to a legacy system and updating, one is the decimal points, obviously, in tokens, right? 15, 18 decimal points. You can only do 4 in a legacy system in TradFi.
Well, and there's that component, which is fine on the financial reporting side.
That's right.
But when you actually need to track the dollars and the cents intra-month or during closing periods, it brings up a specific nuance, just around, how detailed are your records? What, is that enough data for your auditors? There's a lot of different things that pop up. For us, it's just about creating a stringent style and framework around being able to agnostically push that data. And we don't care what the reporting system is, but the reporting systems do need to have a way of being able to transfer those files accurately. And are there checks and balances between the middleware as well as the reporting systems to make sure that everything that is being, because you input garbage into Avent Geneva, you're going to get garbage out. And then it's going to be a headache for the entire service unit team, for anyone, for the CFO, from the client perspective. Our goal is really to reduce all that and automate that as much as we can.
That makes sense. Can you maybe share, like, what's the most surprising thing that you've uncovered dealing through portfolios? I'm curious. That you thought maybe wasn't the case, and you kind of dug into the details and the data, and this was maybe a surprise for you.
I mean, nothing surprises me anymore. That would be the first thing that I would say. I think the other thing, when we sit there and look about client work, candidly, sometimes I've been very surprised how well Otto's been able to do with the quant trading pieces. And that has been one. I mean, I talked about, the total transaction volume of just what Otto's been able to ingest and provide support for. I mean, that's a lot, 4 trillion. I don't think anyone in this industry could say that. And I think the thing that it comes into in particular is just, how do you feel, comfortable around those things? Surprise wise, it could be the littlest bug that pops up and it could throw off almost everything in a portfolio, which is why I'm surprised. And I'm also not surprised, but there's just so many checks and balances that I don't think a lot of like subledger groups candidly think about, or they think that the debt, the software debt, like, required to be able to manage and fix those all the time. Because I'll be candid. Well, we had to decide whether we were going to buy or build certain components of Otto, and we would send these out to various groups to test them out. And a lot of them manually plug some of these things. We can't have that, especially when you, as a fund admin, you need to tie it to the cent. And we've kind of maintained that thought almost to everything that we've done, is maintaining that standard and framework of pursuit of excellence. And the tough thing is for every chain, they're a little bit different. There's nuances, heavy differences. And, I know, for certain ones, especially at the beginning of Solana, that was a big pain. That was a major pain. Looking at specific nuances around beacon chains and how we get certain staking activity for ETH and other stuff. Like, we don't feel that a lot of these centralized groups still even give great reporting on those, which is why, you have me knocking on their door, because they haven't bifurcated the information or the rewards or the MEV components as well as it should be done. And so it's nice to be able to pick up the phone and have like receptive folks on the other side of this. And it really does take a community to raise a child, but it also takes a community to be able to pass your audit. So that's a way that we think about it.
Right.
So that's how we spend our time, basically, in thinking about just, where we could be providing value and, what is going to be that next hurdle for us to think about.
Yeah, a lot of good things there, Pat. And obviously there's a lot of, there's different softwares out there for, portfolio tracking, things like that. Kind of what's in your opinion kind of the biggest thing that differentiates you guys at Otto?
Yeah, the bread and butter is the reconciliation. No one's doing an intraday reconciliation and at most they're doing it at the end of the day. We're doing it intraday hourly, and we can also bring that down even to a tighter component, a tighter time window. It really is just dependent on the type of activity. But at the end of the day, I would say the largest differentiator is, one, subject matter expertise of the group. We've been doing it the longest. We've been doing it with a number of the managers that have been in this game the longest, who trust us to do that. We're talking multiple billions. And I think the other thing that it comes into is just this, our perception of clean data is different than other people's perception to that. And it really comes down to the reconciliation.
Yeah, makes sense. You brought up earlier the question of buying versus building, right? And that journey. Are there any, obviously you built a lot of what you've done in-house. Is there any unique partnerships that you want to maybe highlight or talk about that you've kind of worked with along the way to this point that have kind of helped you get?
Yeah, I mean, I would say one in particular, and we've been very public about this, was we were having a lot of issues around staking data. And it may shock or surprise you, and it may not, but most of these staking providers send you effectively CSV forms and files that you are just supposed to upload. And for us, not only do we find them to be incomplete, have gaps, we really also get concerned about what is happening within the staking ecosystem as it relates to, do these groups actually own their own physical bare metal as well? And the reason being is that, and I'm happy to talk about this, one of the main reasons we partner with Global Stake is Rich Shorten and his team, Jordan, David, Tom, they're former telecom guys. And so they own the physical bare metal, and they're also, they're running, their nodes and the other things for each of these blockchains. But, as they're supporting some exchange traded products and asset managers and other things, they were actually looking around. Not everyone has their SOC 2. Everyone is sharing these CSV files with each other. As institutions are coming in, don't think that they're really going to want to, be ingesting a bunch of flat files. They'd like to be able to get those via APIs or, a PDF that is representative of all that type of activity. And really what it came down to for us was, well, if you have other large players, whether that be Figment or Kiln or other ones that are Blockdaemon, others that are heavily reliant on AWS or Azure, really it comes down to, well, isn't that still a centralization risk? Isn't that something that we need to be thinking about a little bit? What happens when AWS or someone just decides that they're going to they're going to squeeze the margin and up their fees? Well, a lot of these groups, if they don't own their own physical infrastructure, they're going to be up shit's creek. And so what our general thought is that these guys have gone a compliance first approach, and they care about the reporting, and they know that the reporting isn't as good as it should be for institutions. This was a big partnership for us, being able to now solve this in tandem with them. We have a number of exchange traded products that we're supporting together, custodians that we're supporting together, a number of different groups that now see the differentiation of bare metal versus others as a good way of almost thinking of it as like a multi-prime model. You don't just have one prime broker. You kind of segment your risk and diversify a little bit. And that's why we've spent a significant amount of time not only partnering with Global Stake, but also helping them go to market and hosting events, etc. with them. We're big fans, and they've got some very large partnerships they've gotten as well. Like kudos to that team.
Yeah. Yeah. Shout out to the Global Stake team. Good guys over there. Rich the team with, to question on the staking side of things with, where does the difficulty come in? Cause I mean, I could easily see right off the top of my head, like some low hanging fruit, like in terms of, the yield's going to change over time, different things like that. So, I mean, I'm a big institution. I give $100 million to a, group, whether it's Global Stake, BitGo, or, anybody else that's offering like staking services. What's, I guess kind of what's the challenge in terms of reporting? Is it just like that, because are the payments inconsistent, different things like that? Like,
how things
kind
get
of break it down for us.
how things get bucketed. It basically is what is getting thrown into what bucket, and can you untangle the wire? And a lot of times, whether there are certain rewards or there's whether they're miscellaneous, whether there are transaction fees, whether they're a lot of times these get bucketed all together, and so a lot of folks actually don't know sometimes, and it's a common component of how much fees are they actually paying on this.
Right.
And there's some, it's kind of like an office, like it's a little opaque in terms of how these groups message the rewards, and also how much off the top they're keeping, whether that's from a Solana like validator component or other networks. It really just, you have to look at it on a protocol by protocol basis, and being able to segment those buckets and untangle those wires, it has proven itself to be a pretty challenging and arduous task. And candidly, our team has spent a significant amount of time on this, more than I have. But I think the big thing that it comes into is, are these groups being transparent? Are they being transparent from the validation side? Are they being transparent from the transaction fee side, et cetera? And yes, a lot of this can be shown on the blockchain, but also a lot of it can get bucketed and or misconstrued as other type of activity. And so just making sure that we're capturing that and that we're calling a spade a spade.
Yeah, those are great points.
Yeah.
All great points, especially the fee side. Fees obviously get bucketed a lot of time into the trading. The trade doesn't break out the fees, and all that happens quite often, right? And other stuff, it's all bucketed together, and you have to, obviously, gap accounting or whatever you're doing, you have to kind of segment out everything. And to your point, even that, though, once you go back to the counterparty, you may not be able to get the full story.
Well, and it depends how far you want to go back, and do they have that historical data component, and are you a validator, or what is your hierarchy within the protocol and the amount of assets you have?
It's a rabbit hole.
You're right. And I'm not a staking guy. I mean, you could ask the Global Stake guys. We've handled a lot of that in particular, especially around the MEV components and other things like that. But I think really what it comes down to is, you're going to have more and more groups, specifically these centralized platforms, who are trying to generate income, and how you slice those pennies among 3 or 4 groups, specifically if everyone has their hand in the jar, you're going to need to make sure that you're reporting on that stuff accurately. And that's where we're coming in to help on that.
Yeah. Another, on that kind of same note, on that same topic, and Pat, I'm just thinking about, another aspect that people don't realize is this is a 24/7 market. If you're picking a time to cut off the NAB, all the trade data and activities, and then that's not standard. Maybe it's midnight UTC, 4 p.m. Eastern, or something else. There's not, there's a lot of changes in the mix underneath that layer.
Yeah, and how you bucket the income, and obviously each fund manager has their preferred NAV cutoff time, and Otto can account for that as well. But I think the big thing that comes into is really just figuring out what everyone is up to, like the processes that are required to make the automation easier. And if you are going to be dealing with certain cutoff points, and you are going to be dealing with just specific nuances around your portfolio accounting, ask a group that knows what they're doing. I'll get you 95% of the way there. It's nice when you've got Seth and others willing to hop on from a subject matter expertise.
What's got you excited in the market right now, Pat? And I know you used some VC investing on the side too. So what are some areas of the market that you're excited about right now?
Yeah, call yourself a VC is I think that's more. It's more of like I'll call myself like a hummingbird to an eagle. I think we all get privy to like unique things that are happening within the industry, and I think there's like really unique opportunities. Should we want to have SPVs or write our own little personal checks, get in certain rounds, etc. For myself in particular, and I think about this, and it comes down to really like two things. What are like the broad narratives that are going on? I really feel very positive about what these BTC kind of DeFi plays, like yield structured product components on BTC is very interesting. I also think that there's a lot of interesting things that are happening within the Solana ecosystem. Candidly, everyone's vying for tokenization. I don't know as an investor how to make money on those types of things. I will say, like, I do look at certain deep-in projects. Like, I think Dawn is a very interesting one. They're effectively an outsourced internet service provider with a physical hard drive, and or a physical hardware. There's also some things that are happening within AI. I got put on to like Succinct with the Prove and some other things. And then I would be doing myself a disservice to pump my own bags if I weren't talking about Hyperliquid and just what's happening over there. I think everyone within the industry is bullish on that group, and this is also where I plug in kind of the coin alts component. But we're going to be having a number of these treasury groups coming and talking about it, and having the Hyperion DeFi CIO, Hunsu. We're looking forward to having him. And I think DATs are a very interesting play, especially if you're trying to if you're a traditional person looking at it. Me personally, do I participate in them? I haven't to date. I think the thing I think about, especially around the DAT narrative right now, is, well, if you can get people to buy in at a multiple of NAV, or at a multiple of effectively your holdings, that's a pretty interesting trade. The question is can you get enough people to do that? And then I think there will eventually be a consolidation, and yes, there will be some key players in certain ecosystems, but that always comes down to foundations and other things. But most of my checks are like little things. A lot of narratives on AI right now. There's a lot of interesting things that I'm seeing in the Bitcoin DeFi component, which I'm helping and advise on a project called Torum. They're building a programmability layer on Bitcoin, and they plan on setting up oracles to natively bring off-chain information to the not arguably, the most important digital asset in our industry. And the fact that there's not more built on top of there's other groups like Alpin and others that are kind of doing some other things, Lombard, etc. But I think they have all had their own challenges on, is it a layer two? Is it happening? I think there's a lot of narratives to figure out there as it relates to what's going to happen in BTC-Fi. And they still have to work on that name. I hear BitFi, I hear
BTC-Fi.
Yeah, there's still plenty to kind of sort out on that as well.
Yeah, I like it. yeah, there's a lot of interesting things, and I guess the last thing I really want to talk to you about, I'll look anything else on your end, Skyler?
I think this has been great. I guess one aspect from a stablecoin perspective, you brought that up earlier. What do you see in that space? Obviously, regulations have changed dramatically in the U.S. this year. I think it's a good thing. But what are your thoughts at a high level? As we kind of go into the end of the 2025 year here.
So I'm going to steal this idea from Alex Witt. I don't know if you know him of Cello, but I think the biggest thing that's going to be coming into stablecoins, candidly, is going to be around proof of identity. And for stablecoins to continue to proliferate and continue to grow, we need to have ways to cryptographically prove our identity without giving away too much of our identity, if that makes sense, or giving away too many features for security reasons and other reasons. The reason being, and the thing that he's opened my mind to as it relates to this is you've got so many people around the world that are dealing with hyperinflation. They're dealing with a lot of just different narratives in their own local fiat. But everyone around the world, they may not have access to a bank. They do have a cell phone. And so that velocity of people paying each other in, third world countries and other places over their cell phones is starting to rapidly expand. Now, this used to be covered by, those cross-border exchange companies, and they take 10% off the thing. Well, now it's getting solved with smart contracts. I really think this boons well for the US dollar. I know that we're dealing with inflation right now, but I do think at some point, assuming we don't just keep the printer on, that this will actually lead to a deflationary narrative for the US dollar in some degree, especially outside of the US. I think other countries or, people who are just trying to preserve their own wealth or means, having access to the dollar is a very powerful tool. But then again, no one is going to utilize a world coin and have their eyeballs scanned, or they're not going to go to Mark Zuckerberg and, do it on Facebook. Not a lot of them are going to trust Elon Musk. Everyone's going to kind of have these factions. So what are they going to do to prove identity to go across these platforms? To Alex Witt's point, he thinks Self Labs is going to be a very important group to look at. They basically prove identity through biometrics in a ZK proof manner. Mm-hmm. And they've got some very powerful partnerships, one notably with Google and some others. So I think when I think about stablecoins and the narratives, like, yes, you could go the regulatory route and like this boons well for capital markets and for settlement and for trading, et cetera. But I also think it's a lot bigger terms of opportunity for people who are outside of the US, candidly, to be able to have access to the dollars. And my general thought is, if we are tokenizing dollars, that means the hierarchy, it's gonna, really support that narrative of Bitcoin as a digital gold and as a reserve. And I think it's not that hard to back into some of these numbers that people get into.
Yeah, for sure. The zero knowledge proof mechanism is pretty amazing when you really kind of distill what it actually can do for the ecosystem, right? And to your point, I mean, in other countries where it's so volatile, where the markets, you buy something in the morning, in the afternoon, it's a different price. To your point, it solves a lot of that heartache, shall we say.
I wish I could say these are my ideas, but a lot of what I've given you today are just me just pulling from our network, or from folks who really do spend time tackling these difficult topics, and it allows me a little bit of alpha just to think about where things and narratives are going. But specifically for stablecoins, that's how I think about it.
Yeah. Well, cool, Pat. I think this is a good spot to wrap up.
Yeah.
Before we do, tell us any Airstream trips coming up?
So I mean, this is kind of the cool part, right? Got the Airstream, and I think I can now. It has an office in it, and I can work remotely. I'm not in it right now. I
love
wish,
it.
but
Next spot,
we did
the
a
Airstream, maybe.
right. Depending on my
The
Starlink,
website.
yeah. But no, I think candidly, we are in a remote first environment with crypto. I mean, we've all proven that we're
Yeah.
adults and we can work now and we don't need to be in an office. Now, I do think it takes away for certain components of like working with people. But we get to see each other at conferences and events and hang, so there's those times to be able to do it. My thing for the Airstream was really just be able, I've got, young kids and I want to be able to take them out and enjoy some time with the family and, maybe shoot some guns, or whatever I can get into. And I think the thing that I also think about in particular is just being able to pick up and go, but also being able to work. It's a beautiful thing,
It's
and
huge.
being decentralized is part of the industry. I feel like the Airstream is my decentralized node from reality. So
I love it, man. I love it. I hope to follow in your footsteps. Well, Pat,
you'll
this
get
has been a
there.
lot of fun, man. This has been a lot of fun. Where can people go to connect with you, learn more about Otto, and also, let's give a quick plug to your CoinAlt event coming up next
Yeah.
month.
So Otto, you can follow us on LinkedIn and Twitter. We have it as autodigital.io is the website. And there's a number of links there that you could go and see that. And also you can watch demos of the product from there. CoinAlts, that is going to be the last week of October. It's going to be part of a broader week called SF Fund Week. We're going to be working with the Sohn Conference, with CalAlts, with PEVC Cares. There's also going to be a number of allocator events throughout the week. We're going to have a number of speakers, and this is going to range the topic of best ideas in crypto, where managers are going to be pitching best ideas. We're going to have regulatory panels. We're going to have stablecoin panels, tokenization panels. We're going to have ecosystem panels. We're going to have a maximalist treasury panel. There's going to be an allocator panel. There's also going to be, related dinners and, breakfasts related to that. And I think the big thing for us in particular is if you guys are looking to participate, this is all free to fund managers. So if you guys are fund managers or you've got a fund entity, just sign it up and you're free to go. Just go to coinalts.xyz and sign in and drop our name in there. And if you're an allocator, tell us you're an allocator and we can invite you to the allocator events as well.
I love it. That's great, Pat. Appreciate the time, my friend. We'll make sure to include all that in the show notes. This has been great.